Have you ever thought about investing in Altria stock? Welcome to our deep dive into the world of Altria Group, a heavyweight in the tobacco industry. Born in the early 20th century under the name Philip Morris Companies, Altria Group has been a major player in the tobacco universe for decades, creating some of the world's most recognized brands. The company's business model is primarily centered around producing and marketing tobacco products, from cigarettes to cigars, smokeless products, and wine. This has enabled Altria to build a strong presence, not just in the United States, but across the globe. This industry titan has a rich history, filled with strategic acquisitions, innovative product launches, and continuous growth. But history is not all that Altria brings to the table. The company's financial performance and commitment to returning capital to shareholders have made it a darling among dividend hunters. So what makes Altria a potential addition to your investment portfolio? Let's delve deeper. To understand the potential of Altria's stock, it's crucial to examine its financial performance. Let's dive in. The primary measure of a company's financial health is its revenue, and Altria has consistently demonstrated robust revenue growth. Over the past few years, Altria's revenue has shown a steady upward trend, indicating strong and consistent demand for its products. But revenue is just one piece of the puzzle. Earnings are equally important as they reflect the company's profitability. Despite facing several challenges, Altria's earnings have remained resilient, further underscoring its financial strength. Cash flow, another critical indicator of a company's financial health, paints a similar picture. Altria's strong cash flow generation ability signifies that it's not just earning profits, but also efficiently converting these earnings into cash, which is vital for sustaining operations, paying dividends, and investing in growth opportunities. Now let's talk about financial ratios. The price-to-earnings, or PE ratio, is a key metric to measure a company's valuation. Altria's relatively low PE ratio suggests it could be undervalued, potentially offering a good entry point for investors. Furthermore, Altria's high dividend yield and payout ratio indicate a strong commitment to returning capital to shareholders. This is a positive sign for dividend hunters looking for steady income streams. Additionally, Altria's low debt-to-equity ratio shows that it has managed its debt well, which adds to its financial stability. A lower ratio means the company has not been aggressive in financing its growth with debt, which can often lead to financial distress. Overall, Altria's financial performance paints a picture of a financially sound company with stable revenue, resilient earnings, strong cash flow generation, and prudent financial management. These factors, coupled with its attractive valuation and commitment to dividends, make Altria a compelling consideration for investors. Now that we've looked at the numbers, it's time to explore what they mean for you as an investor. For those seeking consistent income from their investments, dividends are a key factor. Now let's delve into Altria's dividend profile, a feature that has caught the eye of many a prudent investor. Altria has a rich history of rewarding its investors with dividends. For over 50 years, the company has been consistent in paying dividends, demonstrating its commitment to shareholders. This consistency is a signature trait of Altria's financial health and stability. But the company doesn't just stop at consistency. Altria has also been increasing its dividends over the years. Yes, you heard it right. The company doesn't just pay dividends, it grows them. This growth, coupled with consistency, is a testament to Altria's robust financial performance and its capability to generate substantial profits. Now you might have heard the term Dividend Aristocrat tossed around when discussing Altria. But what does it mean? Well, a Dividend Aristocrat is a company in the S&P 500 index that has increased its dividends for at least 25 consecutive years. And Altria, my friends, is a proud member of this elite group. Being a Dividend Aristocrat is no small feat. It's a badge of honor that signifies a company's strong financial discipline and its ability to deliver consistent returns to its investors. So what does this mean for you, the investor? The potential benefits are twofold. Firstly, the consistent dividends can provide a steady stream of income which can be particularly appealing for those seeking stability in their investment returns. Secondly, the growing dividends can potentially lead to a rise in the stock's price over time, offering the possibility of capital appreciation. But, like any good story, this one also has a flip side. While Altria's dividend profile is impressive, it's not without its risks. The company's heavy reliance on the tobacco industry could pose challenges in the face of shifting consumer habits and regulatory pressures. Impressive, right? But, as with any investment, it's important to consider the risks. So before you make a decision, weigh the potential rewards against the potential risks. Remember, the key to successful investing lies in making informed decisions. Investing in any stock comes with risks, and Altria is no exception. Let's delve into the possible challenges and risks associated with investing in Altria. One major risk factor that can't be overlooked is the ever-changing regulatory landscape. Governments worldwide are constantly tightening regulations on tobacco products, leading to increased costs for companies like Altria. Additionally, these regulations are often accompanied by heavy penalties for non-compliance. And it's not only about government regulations. Public health initiatives are another significant hurdle. With a growing emphasis on healthy living, trends are shifting away from tobacco use. Anti-smoking campaigns, health warnings, and the increasing popularity of smoke-free environments pose substantial challenges for tobacco companies. Moreover, the rise in litigation cases against tobacco companies is another risk to consider. Over the past few decades, numerous lawsuits have been filed against these companies, many of them resulting in hefty fines and settlements. Altria, being a major player in the industry, is not exempt from this trend. Then there's the risk of declining smoking rates. Yes, this is a good thing for public health, but not so much for a company whose primary product is tobacco. As more people quit smoking, the demand for tobacco products decreases, which can potentially impact Altria's revenue streams. And let's not forget about the competition. The tobacco industry is a highly competitive one, with several large players fighting for market share. Any missteps by Altria could provide an opportunity for its competitors to swoop in and grab a larger piece of the pie. Lastly, there's the risk associated with Altria's investments in other sectors, such as alcohol and cannabis. While these investments offer potential growth opportunities, they also come with their own set of risks and uncertainties. But despite these risks, many investors find Altria's dividends and stability appealing. Let's wrap up with a final analysis. So, is Altria stock a good fit for your investment portfolio? We've taken a good look at Altria Group, dissected its financial performance, and delved deep into its dividend profile. We've also looked at some of the risks and challenges the company faces. It's time to bring all these pieces together and draw a conclusion. Altria's financial performance has shown consistency and resilience. Despite the challenges in the tobacco industry, the company has managed to keep its revenue steady and maintain a robust balance sheet. That's a testament to the company's strong business model and effective management. What stands out prominently about Altria is its dividend profile. As a dividend aristocrat, the company has increased its dividends for more than 25 consecutive years. For those seeking a steady stream of income, Altria's strong dividend yield can be a magnet. However, it's important to remember that past performance doesn't guarantee future results. The risks and challenges cannot be swept under the carpet. Altria operates in a highly regulated industry that's under constant scrutiny. Legal issues and changing consumer habits pose significant risks. But remember, risk is a part of every investment. The key is to balance the potential rewards against these risks. What does this mean for you as an investor? It depends on your investment goals and risk tolerance. If you're seeking a stable dividend payer and are comfortable with the industry risks, Altria could be a good fit. On the other hand, if you're risk-averse or prefer to invest in industries with more growth potential, you might want to look elsewhere. In the end, the decision to invest in Altria's stock, or any stock for that matter, should be based on thorough research and a careful consideration of your financial goals. It's important to understand the company you're investing in, its industry, and the potential risks and rewards. Remember, the best investment decision is an informed one. Do your research and consider your options carefully. That wraps up our deep dive into Altria's stock. We've journeyed through the financial performance, assessed the dividend profile, and weighed the risks and challenges. It's been an enlightening exploration, and we hope you found it to be as well. Remember, this analysis serves as a guide, a starting point. It's crucial to conduct your own research and consider your financial situation and goals before making any investment decisions. Every investor's journey is unique, and what works for one may not work for another. If you found this video helpful or interesting, we'd love for you to hit that like button. It helps us reach more people, and it's a great way to show your support. Also, don't forget to subscribe to our channel. We regularly post videos with insightful investment analysis that you won't want to miss. Lastly, if you think this video could benefit someone you know, feel free to share it with them. Knowledge is power, after all. Thank you for watching. Remember to hit the like button, subscribe for more content, and share this video with your friends. Stay tuned for more insightful investment analysis. The information provided in this video or communication is for informational and educational purposes only. It is not intended as and should not be considered financial, investment, legal, or tax advice. The content is based on general principles and may not be applicable to your specific financial situation or needs. Always consult with a qualified financial advisor, accountant, attorney, or other professional before making any financial decisions or taking any actions related to your finances. Any investments or financial decisions you make are solely your responsibility. Past performance is not indicative of future results, and there are no guarantees of any specific outcomes or returns. While every effort has been made to ensure the accuracy and completeness of the information provided, we do not warrant or guarantee its accuracy, reliability, or suitability for your individual circumstances. We do not endorse or promote any specific investment products, services, or strategies mentioned in this video or communication. Any references to such products, services, or strategies are for illustrative purposes only, and do not constitute a recommendation or endorsement. You should conduct your own research and due diligence before making any financial decisions. In summary, this video or communication is not financial advice, and you should not rely on it as such. It is essential to seek professional advice tailored to your specific financial situation and goals before making any financial decisions or taking any actions.